Welcome back to another Stock Market Open Live. Well, today we are looking at potentially a continuation of what we say is the melt-up in the stock market. You've got a lot of green across the board. Take a look at this. You've even got N-phase green. Now you know it's saying something when N-phase is green. N-phase is green 1.91% in the pre-market. You've got some enthusiasm that, who knows, maybe the bottom could be in for N-phase. So N-phase doing very well here. Another one to pay attention to today, Palin of the Tiers. Palantir sitting at 261 in the pre-market. Another one would be AM Dizzle. AM Dizzle sitting at a 137 in pre-market. Pretty powerful. Now, Google's not holding up. Neither is Rivian. Google actually down about 73 basis points. Kind of makes me wonder if there's some news there. And Tesla finally giving a little bit of a breather to the crazy rally that it's had. The big question today is going to be, will Tesla be able to hold above the 250 line? It's a very critical point for Tesla trading. Otherwise, Tesla might be right on back to $230. NASDAQ up about 0.08, and a few economic catalysts to think about this week. In fact, some big ones. It is CPI and PPI week. Thursday and Friday, we'll get to cover CPI, PPI. You do have good old Jerome Powell talking in Congress both on Tuesday and Wednesday. So we'll see if he ends up planting any seeds for a potential July rate cut. I don't think so. Here's some dude talking Tesla now. Let's take a listen to it right now.
40% in the last couple of weeks. It's clearly riding momentum of better than feared results, but this is a company whose deliveries were down 5% this quarter. They were down 9% last quarter. It's trading at 125 times earnings. There's anticipation that things may get a little better, but they're still not good. And there's anticipation about a robo-taxi event in early August. And so we could continue to see some momentum in the stock, but this is meme-like, quite frankly. The valuation is disconnected from the fundamentals. The company was supposed to earn $7 in earnings this year. Consensus estimates are now $2. The stock price is really not that different. And it's really about enthusiasm that things may get better and that Tesla may say something really exciting at its robo-taxi announcement. But at the end of the day, stocks get measured on cash flows and future cash flows. And we just see a disconnect between what that earnings and cash flow power is and the company's current share price.
Tony, I hear your point, but that is the same argument that the shorts have been making against Tesla for a very, very long time, to their great dismay. I just wonder, do you keep your $120 price target, or is there a point where you have to say, okay, forget it, we're back to earlier valuations of Tesla, and I'm not going to stick to it, or do you?
Well, look, I mean, of course, any investor has to be open-minded about what a company may or may not do. And so if we did see a path where Tesla could be a leader in autonomous vehicles, or Tesla could build a very sizable business of building humanoid robots, of course, we would have to adjust our outlook and our future estimates and accordingly our price target. But at this point, we don't see that. We believe that autonomy is a ways out, and we don't believe that Tesla will uniquely solve that problem. Waymo has been working at this. They've been doing trials since 2012 on self-driving. Tesla has not done any public trials. Not to say that Tesla won't do well in full self-driving. It's just not something that it necessarily will be able to exclusively do. And you have to almost believe that to get to the types of valuations that Tesla stock is currently trading at.
All right, let's shift gears and talk about Apple. We just heard, I'm guessing you heard the report that we just went through about what the EU is doing, focusing on some of these big companies, and Apple in particular. Does it worry you about the EU's influence on this? What do you think of the big run that we've seen in Apple shares over the last several months? And I should point out, you were right on that. You did have an upgrade in late April when the stock was at 170. It's now at 227. So what do you think happens from here?
Yeah, so look, regulation has been a threat to Apple for the last several years, both in the US and in Europe. The DMA ruling is really around the App Store. The App Store in Europe is less than 0.5% of Apple's total revenues. And so even if regulation did force Apple to make concessions and that business was compromised, it's pretty immaterial. But I do think Apple has a very strong consumer value proposition. Becky, I think you were talking about that earlier. Consumers enjoy the App Store. It's easy to use. Apple, makes sure every app is approved and there's no pornography or anything else that's inappropriate in the App Store. And so I do think Apple does a really good job, and ultimately any legislation is not likely to either be material in terms of the size of that business, and I think it's going to take a long time to play out. I think in terms of the stock, investor sentiment has shifted. Apple was perceived potentially as being a laggard in AI. I think the belief now is Apple can be a leader in AI. Yeah. We think earnings next year could be close to $8.
Yeah, I'm a big fan of that idea that Apple could be a leader in AI. I really think on-device AI is going to be a game changer.
I think that's achievable.
Okay. Tony Sacconaghi. Tony, thanks a lot.
Thank you, Becky.
When we come back, the American Enterprise Institute's Arthur Brooks joins us for an extended conversation on the state of the...
All right. Yeah, and he's not wrong about the momentum in Tesla stock. I mean, that's the key right now, is what kind of momentum can you get going into the robotaxi event. Although it does look like his yapping just led it to drop under 248 there, or maybe that was just convenient timing. But anyway, so Tesla's been bobbing around these levels pretty much all pre-market here. Looks like 247.74 is a level it keeps wanting to bounce at. So I'm actually going to take this purple line. I'm going to move it a little bit. There we go. Let's see if that's useful at all. Let's see if we get a bounce there or not in pre-market. We'll see what happens. Then Robin of the Hood is, let's see, barcoding above this 2256 level here. PayPal. I don't know, is PayPal going to be able to break $60 today? That'd be nice. Boy, it's been sitting under $60 for quite some time. Anyway, okay. What else? Ooh, look at that. Super Microcomputer is bouncing off of its line. It's 840 line. That's pretty interesting. All right, that's going to be something to pay attention to. Yeah, let's see here. Then we've got... Let's see what's talked about today. Let's see here. How about Intel? Oh, Intel up 334. Let's see what's going on here. SolarEdge got a little bit of an upgrade, by the way. It's up about 6%. Went from down to neutral at Bank of America, leading to a little bit of a bounce. And over the weekend, we heard Samsung could develop 1nm chips with new power delivery. I don't know why that's in the Intel section. Intel volume rises on Friday. No particular news there on Intel. And, oh yeah, look at that. A little bounce there on Tesla. Interesting. Okay, so I'm going to watch that. This 247.70-ish line. I'm going to watch that line. It seems to be somewhat useful in the pre-market. I've seen it land here before. I don't know how strong that'll be intraday. But we shall see. Okay. Q's up about 10 basis points, so we got a rise in the Q's going into the open market. ARM doesn't want to move as aggressively as some of the others we've been talking about, but ARM's also trying to move up. Baba is still stuck in the mud, not going anywhere. Coinbase back over 225 as BTC sits at 57. What a roller coaster this thing's been on. I mean, really stuck now between this 52 line and the 58 line. That's kind of really the no man's land we're in right now. All right, what is this?
He is American Enterprise Institute's president emeritus and a professor at Harvard. And Arthur, watching all of this, what are the lessons you're kind of taking away?
Well, I mean, obviously, it was pretty disturbing what we saw last week, and a lot of people are questioning President Biden's capacity to lead for another 4 years. But beyond that, what he's doing is acting incredibly defensively toward the people who care about him the most. And this brings up an important point for pretty much everybody who watches Squawk Box. Leaders watch this program. And the question is, are you writing the end to your own story? I mean, leaders have to do this. If you want to be remembered in a good way and leave your organization in a good place, you can't just write your story as you go along and hope it ends well. You have to write the end to your own book as well. What is the end of your career? Plan it out. If you don't, it's going to be some form of what we've been seeing in politics for the past 2 weeks.
Biden talk. You know, there was supposed to be a meeting with some of the Senate Dems today and Biden, and that meeting got abruptly canceled. So what does that mean? Does it mean Biden's definitely going to stay in the race? Oh my gosh. Who knows? A lot of folks are saying that. Oh no, he's got to stay. I mean, it's fine if he does. It's just going to probably mean a guaranteed loss for the Dems, but okay. What do we got over here?
That the occupants of the Oval Office
more Biden
capabilities to do that job, but that responsibility relies with the Vice President Kamala Harris.
What? She has responsibility?
Policies. How much are we getting a sense of that right now?
Well, he'll just repeat what he has been saying, and this will probably come in his opening statement because it's the basics for them is that they are committed to 2%, and they're going to keep going until they get there. Doesn't mean they can't cut rates before that. And he's also been saying, as have them all, that we're now paying more attention to what's going on in the labor market, that the risks are about even, but we have more work to do, so we're not cutting rates all the way down. As soon as they start hinting that they cut rates, then we go into a different discussion of how far do they go.
Right.
Traditionally, they don't start.
How many cuts do you get? You got to price in once you start cutting.
You heard her Adam posing conversation about tariffs, about what migration, what this will mean for inflation. At some point, will Powell lean into what potentially this could mean for a Federal Reserve?
No, he will avoid that as much as possible. And the reason makes sense is these are all speculative situations. I mean, we don't know who's going to be president. We don't even know who's going to be running for president for sure right now.
That's
so
fair.
what policies are going to be adopted for 2025? We know there are some big risks. We've got the tax bill, we've got the debt ceiling, and of course, just funding the government itself is drama a lot. And until the Fed sees what's going to come of that, they're not going to be able to make any decisions. Their first meeting is in 2025 is only 9 days after the new president takes office. So it's going to take a while for all of this to percolate through. Not to the markets. The markets will react any time. But for the Fed to think about what to do, it's going to take time, and they'll want to see what's actually happening.
We'll be patient, of course, Mike. Super patient. Mike's going to stay close. Joining us now, we won't be patient at all. Zach Griffiths, a credit scientist, alongside Rabila Faruqi of High Frequency Economics. Rabila, a question that I had last week, many others as well. The data last week, never mind opening the door to September, does it open the door for a real conversation, a live meeting in July about cutting interest rates?
Good morning. We think the data cumulatively, if you look at the growth side of things, if you look at spending, if you look at inflation, and then, on top of that, what you're seeing in the labor force. What you're seeing is there's better balance between inflation and the labor market. And we do think that there's enough evidence in the data to at least start the conversation. We don't think there's enough for them to move in the July meeting. They get more information between July and September. That's going to be important. So I don't think they need to rush the decision. And also, this Fed is very careful about not surprising the markets. But I think the discussion definitely can start, especially if our outlook, if things do turn out the way we expect them to, which is an ongoing slowing in what we're seeing on the growth side, and also in terms of what we're seeing on the labor market. That is very key. That rise in the unemployment rate for 3 straight months. The unemployment rate is still very low, but perceptions about the labor market from households, they have deteriorated. And that is going to be a very key input into how households approach.
Yeah, about the unemployment rate going up, some folks are really worried about the SOM rule getting closer to being triggered. One thing that's interesting about the SOM rule is it basically compares the rise in the unemployment rate to the moving average of the last 12 months moving unemployment rate. But if the unemployment rate is moving up very, very slowly, then what happens is if the unemployment rate now stays at, let's say, 4.1, the SOM rule will actually go negative, or it will go down rather than go up. So what you really need for that rule to be triggered is you need rapid joblessness. That's really what it measures, is the rapidity, if that's a word, of joblessness. And that I don't think we're seeing quite as rapidly as would be required to trigger a recessionary impulse for the particular rule. But it's certainly a concern right now. A lot of folks really concerned about, hey, the Fed's just gone too far here. It's really time for them to start cutting. And it might be time for them to start cutting as soon as July. Although if they cut as soon as July, they might be sending a signal that, oh no, we've gone too far, and they haven't planted any seeds yet. They somewhat tried to, it seems like, with Nick T, start kind of teasing the idea of like, hey, what about rate cuts soon? That's because Nick T of the Wall Street Journal seemed to do a little bit of seed planting yesterday, and he kind of put some more weight on CPI, PPI. So we'll get to see CPI, PPI obviously this week. Will be a big deal. Those are a big catalyst for this week, mind you. You've got really, in terms of catalysts, I mean, okay, big deal. We'll get a consumer credit number today. Nobody cares. Mortgage applications, small business optimism tomorrow. Nobody cares. In 3 days, on Wednesday, we'll get mortgage applications. Nobody cares. And then Thursday CPI, Friday PPI, and the U of M surveys. Those will be big days. So Thursday, Friday this week for big catalyst. It's also when you'll be getting Delta earnings and bank earnings. Bank earnings, it's going to be a big deal.
Pay attention to that at a time where you see such dominance of particularly high-income companies and individuals fueling specific sectors of the economy.
No, I mean, it's a very important point, right? I mean, you are seeing a bifurcation. There is, a split, if you look at what high-end consumers are doing versus what, people at the bottom end of the income scale. But, if you look cumulatively, the sign is still the same. The consumer side of the economy is decelerating. We're not seeing a weakening. We're not seeing a contraction. But this is what drives the economy, and we are seeing a deceleration. What's really important is that the services side of the economy, right, that is now moderating. That is something that we have been looking for a while. And notwithstanding, what we're seeing with airline travel and, things like that, but there is a deceleration. Even if we don't, our base case remains that the combined message is that the economy is slowing, the inflation is on a decelerating path, the labor market is loosening, and those things are going to be what drives the policy path forward. And to us, that means that the Fed has to make the policy stance less restrictive sooner rather than later, managing the risk between the labor market loosening versus the labor market weakening. That is a very tricky thing, and I think the Fed is very sensitive to that. There are a lot of uncertainties. You've been discussing this, in terms of the political arena, in terms of the policy arena. Right now, the Fed has to focus on what we're seeing in the economy. And, we think that means that the Fed has to consider changing the policy stance.
Rubeela, I want to ask you a question John brought up earlier. Is this a welcome cooling you just outlined or an unwelcome deterioration?
I think it is a welcome cooling, but like I said, managing the risk between a welcome cooling and a weakening and a contraction in payrolls and a surge in the unemployment rate, that's very difficult. Chair Powell has talked about this. What they're talking about is an unexpected weakening in the labor market. So they do expect the labor market to moderate.
Yeah, and we haven't seen enough of that sort of unexpected decline yet. It's almost like you've seen this like slow softening in the labor market. Don't get me wrong, immigration has substantially manipulated likely the job numbers that we're getting, especially since so many of the jobs are late cycle jobs. Healthcare and government jobs. These are considered acyclical or late cycle, depends on how you want to look at the cycle. Acyclical just means that while the market is falling, these could actually be gaining jobs. And late cycle could also be that. While everything else is falling, these gain. And that's really because it's easier, specifically for government jobs, to actually hire people because private companies are not as competitive in their job offerings. So it's sort of like private companies are moving out of the way and then the governments are able to pick up jobs. You know, I've gone to my local city building and safety counter for the last, 13, 14 years, and I've never seen as many posters and banners about get a job working for the city, and like everybody's new there, and I'm like, wow, this is different. So it's kind of wild how much hiring there is going on there now.
We have a higher risk of that hard landing scenario that everyone was so fearful of in 2023 emerging perhaps in the second half of this year or first half of 2025. So we are expecting that if we do see more
someone in the comments says, you mean illegal immigration? Yeah, I mean, look, illegal immigration does get counted by a large part in these labor surveys. Remember, the labor surveys, they do not ask the legal status of an employed person or somebody who has a job in a household. So, these aren't... This isn't the La Migra running around, trying to round people up. These are true just surveys of the economy. And illegal or not, if somebody has a job, they're part of the jobs market.
Well, it's like beating a dead horse with a drum. I mean, it's sort of like I just didn't really. If I don't deeply relate. Moving on, I do think that it is a narrow landing path, and I think that that's the concern for a lot of people is that it feels like there is a cooling, and it just is hard to characterize where we're at.
You're having quite a day. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. Paramount shares pre-market up 2.7%. Finally agreed to merge with Skydance Media, and that hands control of the Hollywood studio to producer David Ellison. It also ends one of the industry's most dramatic acquisitions. Paramount chair Sherry Redstone agreed to sell her family's National Amusements. It controls about 77% of the voting stock in Paramount for $2.4 billion. Thousands of workers at Samsung Electronics walked off the job Monday to stage a rally demanding better pay. It's the biggest organized labor action in the South Korean company's half-century history. Negotiations over pay and vacation time collapsed last month. The strike is intended to drive home their demands by disrupting production at one of the company's most advanced chip facilities, according to union leaders. And Despicable Me 4 was the big winner at the holiday weekend box office. The latest movie in the Minion franchise made an estimated $123 million in domestic ticket sales since opening on Wednesday. That according to box office tracker ComScore. Meanwhile, Disney's Inside Out 2 continued its strong run, surpassing $1.2 billion globally since it opened last month. And that's your brief, John.
Danny, thanks for this morning. Appreciate it. Up next on the program, setting you up for a really busy week ahead from New York City. Live from our global headquarters, you're watching Bloomberg Surveillance.
Alrighty, so let's see here. The Peter Schiff question. I see somebody here is talking about Peter Schiff. I like Peter Schiff. Been to his house a few times. Done quite a few interviews with him. What's being referred to here is or the question has to do with the U6 versus the U3 labor report. Basically, U3 is the unemployment rate that we use, which the U3 says our unemployment rate is at about 4.1%. But the U6 will also include people, quote, marginally attached to the labor force, and those employed economically or employed part-time for economic reasons and some others. Basically, they throw in marginally attached. So people who are, not working as much as they want to, people who want a job but can't find one, blah, blah, blah. And that rate is at 7.4%. But the reality is that number has been high for quite a while. I mean, if you go back to February of 2024, it was 7.3, so it's been up there for a while. and June of last year, not seasonally adjusted, was 7.2. So I don't know that there's this huge breakdown in the U6. U6 unemployment rate. Let's see if we can get a chart on that. Yeah, here's the U6. So this is a chart of the U6. And yeah, I mean, it's the same thing. It's sort of this gradual rise. It almost looks just like the U3 employment report. So I don't know that the change over time there has been too particularly significant to talk about. But it does look like Tesla right now in pre-market is trying to move up a little bit. Not only that, but Intel's a mover today. NVIDIA wants to start climbing again above the 125 figure. Big deal for NVIDIA. Q's only up about 6 right now. AMD wants to keep moving. Enphase trying to. Palantir is definitely moving. You've got BTC at 57.5 now. Nice. Look at that move up. 57.5 is a resistance level. Big deal. So let's see if we can break right through this and see if it turns into support. Nobody talks about GME anymore. GME says, I don't think that's necessarily true. I think, you know, when there's momentum and social sentiment around it. But otherwise, it seems like it's been right here around 24 bucks for a minute. You know, we've got a support level at 22.69 for it. And, of course, anyway, it's sort of been riding over there. Let's see here. Smart think, that's funny. Yeah. There's a lot going on, but it's all right. Let's see here. Yeah, interest payments to the U.S. debt. You know, ironically, people get mad at me for saying it, but I don't actually think it really matters much how much the debt is at the moment. As long as our economy keeps growing, that's the challenge. You got to have an economy that's growing and that outgrows the debt and that productivity grows beyond the level of debt. If the economy slows, yeah, then you're screwed. And debt is what destroys countries, ultimately. Jordan says, hey, Kev, if Trump is elected and starts deporting illegals, will that affect job numbers? Yeah, absolutely. Absolutely. So it could contribute to making job numbers actually look less good. So there's this ironic incentive to kind of keep the border open because it does make the numbers pretty, what's that called? It incentivizes politicians to leave that border open to prop up the numbers. All right.
Looking forward to the program.
To interview every single car CEO. I think that is his stated goal. So.
I have no doubt about it. That show kicking off in about 7 minutes' time. The brilliant Kelly Graffard and the team leading Bloomberg's open interest starting at 9 p.m. Eastern Time, or rather 9 a.m. Eastern Time. Counting you down to the open and bound in about 30.
All right, somebody here asked, Kevin, where do you stand on the housing market for the rest of the year? Really? It depends. This is quite location dependent. There are overbuilt markets and there are underbuilt markets. You know, I believe that the underbuilt markets that are protected by idiotic politics like California are actually relatively safe to buy. You know, I mean, this isn't not personalized financial advice. Let's be clear about that. But I have really enjoyed buying California because everybody's trying to run away from investing in California when the reality is California is a wonderful place to buy because the government literally is incapable of building more housing. So you have this delicious hedge that your investment's probably just going to keep going up. And people want to live in California because, not because of people like Gavin Newsom, but because of the weather and because of jobs. So it becomes a fantastic place to buy real estate, especially with your capped property taxes, unlike other states where maybe you don't have a state income tax, but your property taxes or your insurance bills are much higher or whatever. Now, that's not to say that California doesn't have its risks, you know, earthquakes, fires, whatever, rent controls, but you can avoid a lot of these with where you buy. So, you know, on the flip side, I'm much less optimistic about what I'm seeing in markets like Idaho, markets in Florida, markets in Texas, where I think you're actually still kind of rolling over, where you've kind of got a little bit of a problem going on. And I saw that problem in person. You know, I flew around the country last year and this year exploring and trying to understand what's going on in these markets. And I was just in Idaho, for example, and you're seeing the slowing. You're seeing concessions go up. You're seeing the slowing because there's so much new construction. There's so many apartment buildings available, driving rents down, so many rental homes available. It's wild. So there is a balancing effect that's taking place in many different parts of the country, and interest rates are really just going to be one factor in sort of the mess. Do you still have an airplane? Yes. See? It's right here. Look. Let's see here. Thoughts on Lulu stock? You know, the thing about Lulu stock is it's a lot like a Celsius, where you have a fad element that goes into these stocks, and that actually creates very real risks, because when you look at, let's see what's going on with Lulu. When you look at a company like Lulu, $299 now, their pricing power is really determined by how, like, where you are in the fad cycle. Right now, you're in this consolidation range for Lulu. You've been in this range for quite a while. I mean, you've been in this range, quite frankly, since May of 2020, which is remarkable that you've been stuck in this 278 to 390 range for coming on, well, actually more than 4 years now. And part of that is because as the fad goes, even though earnings might still trickle in, the stock goes. It's almost somewhat similar to Celsius, which is roughly trying to bounce off its 100-day moving average. But Celsius is just another brand, much like a Prime energy drink, that is subject to the whims of consumer tastes that can rapidly evolve and change. So I personally like brands that don't have to rely on fad. Like, I don't personally believe that an Apple has to rely on fad, for example. Or I don't believe that Amazon has to rely on fad. So, you know, those are brands that I prefer, that I think have bigger or nice pricing power.
Nice PP!
That obviously contrasts to stocks that, you know, for a while might appear like they have nice PP, but then they end up getting stuck with
little PP.
Yeah. Yeah. So, South Carolina. Any thoughts on buying real estate outside of South Carolina? Let's see here. We were in South Carolina last year. You know, less updated thoughts on South Carolina, mostly because we're starting West Coast, and then we're going to move East Coast. It's going to take a little bit of time to kind of get across the country, a couple years. But, yeah, that probably limits what I could really say about North Carolina. Thanks for the $5, though. What about Nike stock? Did you go to that old dude that sells jets with a private office in London? No, I used to do it. I don't know if he was popular back then when I bought my plane. But no, I used another agent. Where's Househack at? In a great place. I think we're doing really well. Hey, Kevin, do you still believe that if interest rates fall or come down, that it could cause some housing prices to come down? Yeah, absolutely. Mostly because inventory will rise. You know, I think it's very easy for sales agents to say, oh, yeah, rates will come down and then prices will come up, so you should buy now. No, it's not exactly going to be true. I just purchased your Stocks and Psychology of Money course. How do I gain access? So make sure you watch Lecture 1.0. So I know it's exciting to get into the course member live streams, you know, and trade alerts and to see what I'm trading or whatever. I would encourage you, watch Lecture 1.0, fill out the information there. It takes maybe about 5 minutes or so to update. You get in there. Somebody's asking about rent control, yay or nay. Definitely, rent control is pretty stupid. It gives to current tenants who are currently renting, but it sort of keeps them in the curse of renting. So there's a benefit, a short-term benefit to existing tenants. But in the long run, it makes housing more unaffordable. You end up seeing less new construction, and you actually end up seeing rents that are higher rather than lower, which is pretty bad. Pretty bad. But anyway, to whoever is asking about the courses.
Coupon code expiring soon. coupon linked below.
Oh, yeah, and this one's just for you.
Thanks for joining Meet Kevin's courses.
Yeah. Yeah, I don't know anything about the Australia real estate market, but I'm a big fan of buying real estate in general. Okay, so we're now about 29 minutes away from the market opening. Would I buy Nike stock at these prices? You know, a lot of people have been talking about, oh, is Nike a buy the dip opportunity? The thing has fallen pretty dang low. Yeah. One of the reasons their stock has fallen so low is because of this concern over, frankly, their digital growth slowing down. And one of the reasons they achieved a more premium valuation was because they were able to shift to digital and direct sales, which were higher margin. And so seeing that segment slow down is probably what's leading to some form of a sell-off. Now, does that mean it's not overdone? No, it probably is overdone, the sell-off. But let's take a peek at some of their financials, and let's see what we got. So, let's see here. Oh, I want to do this. Okay. I've got in-browser. I paid for this. In-browser Adobe Acrobat now. Let's see if this is any good. Okay. So, let's give that a shot here. Okay. So, what do we have? Okay, so first of all, of their business, more than half of their funding comes from North America, which I think it's always really important to remember where your business comes from and what your exposure is to something like China, which, as you can see here, it's roughly 23-ish, 24-ish% that comes from China. And about, if I remember correctly, about 45% comes from online and digital or direct to consumers. Yeah, here it is. The direct to consumer business is 21 billion out of 49. So that ratio right there is that direct to consumer business, and that's where you're seeing a little bit of slowdown in their forecasts. So that works out to 43.6%. So I'll write that down. Add comments here. How do I do this? Oh, is that how they want to do it? What if I just want to, like, just throw text on draw? I guess I could do that. Yeah, okay. 43.6% from Nike Direct. I guess that's okay. Then we've got, let's see here. Okie dokie. So balance sheet, we've got about 10 billion in cash. That's pretty good. But what are our liabilities? Oh, we've got 10 billion in current liabilities. Yeah, we've got bills to pay, basically of 10 billion, and we have long-term debt of 7.9. So our inventories, our accounts receivables pay off about half of our long-term. Our cash pays off our current liabilities. Okay, so we're not really going anywhere with the company. The company seems robust enough. It is a product provider, so it's not like a crazy balance sheet like some of the SaaS businesses have, the software businesses. So, and they don't give us a cash flow statement, but let's see if they mention cash flow. Cash flow. No mention of cash flow. And where's our forecast here? No particular. Okay, we're taking the near-term challenges head on while making progress in areas that matter. Okay, so it seems like what you have is like near-term pricing pressure, probably just because people are getting a little tighter with their spending right now. So you're somewhat in a macro situation where the company's getting beat up, probably in part due to Oh, this is interesting. Higher advertising expense. So demand creation expense was flat compared to last year, with lower sports marketing expense offset by higher advertising expense. You know, this is actually good for a company like Trade Desk. You know, that's another one that's been running recently. That I've got some good exposure to Trade Desk. It's in my fund too. I really like Trade Desk. But I wonder if they're going to have a little bit. Usually what happens is they like slowly bleed up and then they have a little dump. So surprised their forecast must be more in their earnings call, because we did see a Nike Direct forecast decline. Ooh, Mike Wilson's up. I'll go look at the earnings call, but let's for now listen to Mike Wilson for a second.
Which really means that the few stocks benefit. So I don't think it's a risk now, but with our
email staff@meetkevin.com if you need emails.
More importantly, just the fiscal spending that's going on regardless of the outcome of the elections. I think it could come back into play later this year. One thing we're watching very closely is how they're funding the government. Okay, so we have the reverse repo, which is pretty well understood at this point. There's about $400 to $450 billion left. They can use that to fund bill issuance effectively. They still have a fairly large Treasury general account, so if they need to tap into that because they don't want to issue as much paper, they can do that. And then they still have the Fed, which is going to start curtailing QT now, which is effectively QE. Right, if they start reinvesting, which is what the end of QT is, that's about $600–700 billion annually of bond purchases. So they have the liquidity provisions in place, at least through the end of the year, I would argue, and then we'll see. So 25 could be a bigger challenge for that term premium.
Do they have to go the other way? Does the Fed have to go the other way if Trump wins in November? Because he's talking about massive tariffs on the Chinese. He's talking about deporting millions of people from the U.S., obviously shutting down the border. That's all incredibly inflationary, right? Or it could be, at least according to Larry Summers.
Yeah, it could be. I think the Fed is going to be patient on that because, look, I mean, these things all lag. Right? I mean, even if those things happen, it won't take place until the first, second quarter of next year. And then the impact on the actual data will be a year from now. So I think the Fed is probably is on track now. I think they want to cut rates. They want to cut rates more than 25 or 50 because the curve is inverted by a significant amount. So
25 basis points doesn't do a lot.
I don't think 25, 50 basis points changes this dynamic that we're seeing in the equity market, meaning the kind of scarcity of growth, paying up for growth in a way that we've been seeing. Now, if we were to get 100 basis points or 150 basis points of cuts without a hard landing, then we could maybe see some rotation away from these leaders.
Well, we'll see, of course. So far, the data hasn't even allowed them to do 25 basis points, so we'll see if that starts to cooperate. I do want to talk about earnings season, because in addition to this show launch, we also do have earnings season kickoff this week. And I was taking a look. If you take a look at expectations for 12-month forward earnings, they're at all-time highs right now. I mean, how high is the bar for corporate America, and can it actually meet that?
It's actually an interesting kind of observation, because the reality is, yes, forward 12-month numbers are going up, but they're going up because we're moving out in time. And I would argue that 2025 estimates are, no one's even really done the math on that. No one has really actually calculated no one's estimating 2025. All they're doing is estimating the next 2 quarters and then rolling forward some sort of growth rate. So I would argue that earnings estimates have been coming down on a quarterly basis. Like for the last 18 months, each quarter gets revised lower, they jump over the lowered bar. And that's exactly how we're set up for this quarter, again, which is that earnings have been coming down, they'll probably meet the expectations, beat them, and this is where I think we could start to see 25 estimates come down. Typically in the second half of the year, the market and analysts start to look ahead and say, actually 25, we're gonna have to revise this. And the wild card is starts with the fourth quarter of this year. That's the big hockey stick of expectations. That's where the expectations get challenging. And the question is, can companies manage that in a smooth way between here and the end of the year?
Morgan Stanley's Mike Wilson sticking with us. And coming up next, we're going to talk about Hurricane Beryl making landfall.
Yeah, no, I don't really care about Hurricane Beryl right now. We got to focus on Nike. So, yeah, I was just reading. I mean, they definitely complain about macro in China and the emerging markets. They've had really good growth in their digital business over the last 4 years, but, that's slowed down. So the question is, were you paying for a company that was growing really well that now all of a sudden is seeing a better balance between wholesale and direct? And that's a big deal, because that was supposed to be the real big growth driver, especially since in COVID, that's really what helped explode them. See, so they say here, the actions we're taking on Nike, Direct, and Digital are more aggressive. That's a way of saying that they're having to cut prices more, so they're really losing pricing power here, right? Nobody wants to lose pricing power. It implies that they have...
Short PP.
So not great. So this is a losing PP, we can say right here. So I think, there's more to this than just, an oversold company. They're not saying that this won't U-turn. I mean, you look at a company like Meta, and, everybody hated on them when they, including myself, when they were like, oh yeah, we're going all in metaverse. Where people are like, this is the stupidest thing ever. And Mark Zuck quickly U-turned on that and was able to turn the company around substantially. Now I own Meta and bought the dip on the last earnings, and it's up substantially since then. Yeah, I mean, companies can flip here, but might be just harder when you have sort of a product goods company than versus a company like Meta. What is this? Biden. Okay, Biden just issued a letter. Biden has had extensive conversations with Democratic Party leaders, and he's firmly committed to staying in the race. Would not be running if he didn't think he was the best person to beat Trump. Yeah, all right. The delusion continues, I guess. All right. So, what do we got in the pre-market here? Tesla down 1.5. A little bit of a give back here, it looks like. Then you've got, let's see, Nike. Let's save that really quick. Nike earnings call. There we go. All right. What else is moving here? Celsius just wants to move down. Not great. Let's see here. Okay. Then GameStop's relatively flat. Facebook up another 50 bips over here. This one's been moving pretty nicely lately too. A lot of positive momentum on it. You've got Nvidia up about 1.12. There's Tesla sitting right at that 247 level. Qs are up about 9 basis points. PayPal's trying to break 60. AMD, Palantir, they've got some positive momentum after them here. So does Enphase. You've got BTSys moving. Also getting rejected, though, at that 57.8 level. And let's see here. Apple up about 43 points. So, all right. Keep an eye on this.
Companies, the other 490 in the S&P are not doing well. So what has to happen for them to grow, to increase their earnings, to do well?
Yeah, well, first of all, it's more than 7 companies, but it's not more than probably 30 or 40. So it's narrow. It's like a nifty 50 almost is what I would characterize it. Now, what needs to happen? Once again, we need the Fed to cut meaningfully. We need the curve to re-steepen. We need cost of capital to come down. We need the labor markets to loosen up in a way where these smaller businesses can actually hire people at a reasonable price. They need pricing power to come back. One thing that gets overlooked is companies are losing pricing power now. So while we're all rooting for lower inflation, once again, weaker inflation is not great for earnings. Small cap businesses, small cap companies like Russell 2000 typically only does well coming out of a recession, coming out of a new cycle. Why? Because rates are low, curve is fully steepened, access to capital is abundant, and they have operating leverage again. That's just not where we are. So we need rates to come down as number one, or we need some sort of exogenous positive shock on the growth side that doesn't lead to an inflationary problem. So you tell me where that's coming from. I think it's going to be it's a challenge, and that's why we're not going to fight this trend. I mean, the momentum is so strong because it's right. Now, what worries me is that momentum is so strong and people have a lot more exposure to high multiple stocks than they think they do. And if you have an event that's unpredictable, then you could have a real reset on valuation of 10, 15%. Like I think the chance of a 10% correction is highly likely sometime between now and the election. Not just because of the election, but because uncertainty is going to prevail for a lot of different reasons. Earnings reasons, election outcome reasons, some of the things you mentioned earlier around tariffs, potentially immigration, Fed policy still remains uncertain. So yeah, I think the third quarter typically is that period and it's going to be choppy. Now we're hoping that's going to create some opportunity, but like right here, valuations to me look very, very unexciting.
And it's a great point, too, on you might be more exposed to tech than...
Oh, breaking news, Mike Wilson says don't invest.
tech or so. I do want to actually talk about how all of this rolls into price targets. And typically at this point, I would ask you what your year-end S&P 500 forecast is. But I know that you've backed away from those sorts of calls. And it was interesting. If you take a look at Friday, we got some news from Piper Sandler saying that they're actually going to drop their S&P 500 forecasts, that basically it's bad practice. And when you think about that, I mean, are we starting to see the beginning of the end of these big, bold S&P 500 forecasts?
Well, no, what we did is we rolled forward our forecast 12 months in May, so we take away our year-end target. And look, first thing I would say is S&P targets at a certain time and price is kind of silly, but what I would tell you is that the risk-reward from here we think is lower. Like over the next 4 to 6 months, for the same reason I just mentioned, we have volatility probably picking up in the third quarter. I would say your likelihood of upside between now and year-end is very low, much lower than normal. I'd call it 20–25%. That markets are higher between now.
I think you're thinking of Klonovic, who was sort of let go from JPM.
Then we would get interested. Then we'd be interested to say, okay, maybe there's some things happening at the index level. Where the opportunity remains is at the stock level, at the factor level, okay? And in that regard, we still like sort of growth, but not just quality growth, but like, quality in general, large cap, good balance sheets, companies that can deliver on earnings, and that momentum will continue. It's just hard to find companies that are cheap. So if they were to come in 10%, then we would probably get interested again.
Hey, Mike, elephant in the room here. Theory of strategy. You just lost perhaps your biggest competitor on Wall Street, had stepped down from his post at JP Morgan. Does that put pressure on you to really move forward?
I'm going to keep listening and get another cup of coffee. I'll be right back.
There are just fewer bears on Wall Street.
Yeah, I mean, look, I would say we kind of pivoted on that already. Beginning of the year, we sort of moved away from being too bearish. But at the end of the day, it's a tough gig. I mean, trying to predict, once again, S&P 500 is certain, and that's not an excuse. That's what we get paid to do. Sometimes we get it right, sometimes we get it wrong. And look, it doesn't put any pressure on me to do my job any different, right? Just like being wrong doesn't make me feel pressure. Oh, but now I have to change my view completely. The way we get paid by clients, institutional clients, is to give them a good analysis, a good framework so that they can make their decisions on how I should be investing. And that process will never change.
Well, you've done that for us, so we really appreciate you coming in. Mike, thanks so much. Mike Wilson, there, Morgan Stanley's CIO and Chief.
I mean, that's kind of a fair answer, right? It's sort of like, hey, look, I'm going to give you my perspective, and then you can do whatever you want with that perspective. I think that's fair. If you copy it and it's right, great. You don't copy it and it's wrong, great. You copy it and it's wrong, sorry. Right? So that's interesting. But it's all about providing that perspective, I suppose, giving folks something to evaluate. All right. So what do we got moving now? Let's see here. Well, as of a bit ago, it was Intel that was still moving. Yeah, Intel up 3.12, sitting here at this 33 level. Palantir, another one. So things we're going to be watching today: Palantir, almost up 3%. AMD, Tesla, Enphase. Ooh. And what else we got today? Meta, maybe Now, and CRM, as well as Snow. We'll kind of see where the moves come in today. So these will be some interesting tickers. We'll get to see what happens in El Stocco market. So let's see here. Yeah, I think probably, I don't know if we're at the point yet where BTC can continue to be a leading indicator, but we are getting rejected by that 57.5 number pretty dang clearly. So I'm going to be watching 57.5 for BTC for, let's see here. Oh, somebody on TikTok says the audio's messed up. Oh, I'm sorry about that. Okay. I wonder if I can fix that. So, Is it my voice, or is it when we play audio from here?
Global prices. So disruption there is the thing that's likely to potentially tighten global markets. And if we get disruption at refineries as well, then that's going to tighten fuel markets if it lasts over the long term.
Alice, can you do just that? Talk through the exposure that different companies have, whether it's refineries or otherwise.
Is that better for those of you on the tick of the talk? Did I solve it?
Again, I'm more on the market side, but the majors will all have Gulf of Mexico assets on the production side. They're often the first to lock in and shut down production, given the
Thank you.
Both personnel and the environment in the area. And then also, you have the majors, so Chevron, BP, Shell, with various different assets in the region. Particularly on the US side, you have refining assets there as well.
All right, let's pop on off the oil discussion here. Let's see what's
available that could pull us out of a recession in 60 days. I think that would be unprecedented.
Well, look, I'm not going to say we're headed to recession. Lord knows where this economy is headed, but it's been really weak. And you're right, David, that the economy has been weakening. There's no doubt about that. And it's actually been pretty weak throughout Biden's presidency. But I think what would happen if Trump wins is you're just going to have this explosion of optimism. I mean, investors and workers are going to know we're going to have make those tax cuts permanent. So we have, lower tax rates relative to the rest of the world. We're going to start drilling for all American energy. We're going to get the border under control. Trump has said he wants empowerment power so he could cancel hundreds of billions of dollars of spending. David, you're a financial guy. You have to admit that would be a very bullish scenario.
Yeah, it would. What about taxes, Steve? Very quickly, because they expire. The Trump tax cuts expire in 2025. Will he just extend those cuts, or is there going to be a new regimen? Might he go for something like a flat tax quickly?
Well, I certainly we're going to make those tax cuts permanent. Whether we were able to flatten the rates, we'll have to see. But I know Trump has said he wants to help small businesses the most. And one way of doing that is lowering those tax rates.
Okay, we got to leave it at that. Steve Moore, great stuff. Thank you very much. Appreciate it.
David.
Yeah, quickly.
I did buy NVIDIA stock last year, and I made 10.
All right. So, well, it doesn't surprise me. The Fox folks. Yes, Trump will be great for the economy. I mean, a lot of folks believe that. All right, what does C and Sizzle think? Look, Jim Cramer's up. Oh, because we're 8 minutes away from the open. Woo!
You want to talk a little service now and a downgrade?
This is heresy, David. One of the great performing enterprise software companies of our lives is, well, ServiceNow since Bill McDermott got it. David, this Guggenheim piece suggests in itself, get this, that the generative AI monetization is not happening en masse, not likely to materialize this year. They are thinking that you're not going to get the big Gen AI push from ServiceNow. And David, this is worrisome. I'll tell you why. Because the stock has had one of the great comebacks. This was actually a decent quarter. Bill came on. We know that. Yeah, right. But it fell because enterprise software was so bad. I mean, almost every enterprise software. Remember, Salesforce missed the number. And then, boom, it's come all the way back. And this analyst, John DiFucci, really has timed this thing very well because it's so overextended technically that you could see this thing get hit. Now, what do I think? I think that Bill McDermott is money. He's beaten. He's said over and over again that they're actually making money off of AI. I'm not going to disagree with him. This analyst had a hold on it. It's been a winner. So I don't know. I mean, yeah, the stock's had a big run right here. And a lot of people think it was just multiple expansion. And that's going to be something we're going to be having to talk about a lot of time. A lot. Multiple expansion means paying a little bit more for the same amount of earnings. I saw a piece today about Meta that's like that. Well, ServiceNow's been a little like that. And I got to tell you, David, that's the real worry, is that suddenly people say, you know what, I'm going to pay more for what the guy paid last week. Because you know what that's called? The greater fool theory.
And as we move into earnings season, we'll start getting at least some initial answers.
Right.
And you'll be obviously...
It's such a big week.
Listening to those conference calls every single night or reading them.
Yeah, because it starts. I mean,
you and ChatGPT.
Earnings season never ends anymore.
Reads a conference.
Yeah, ServiceNow, I don't know. I don't know if they're actually going to be able to see a big push in AI. It's almost like a UI path where, the idea is, oh yeah, we help you be more productive and efficient, but now it's so much easier for everybody to have access to these AI tools. Why do you need these particular premium companies? So, I don't know. I'm going to find this very interesting. Very, very curious to see what ends up happening. Yeah, a lot of AI spending that I don't know is actually going to go anywhere. Anyway, ServiceNow down about 3.7% or so. Pre-market here. SolarEdge just gave up a little bit of its push. Intel, Palantir still up there. With, looks like Tesla down about 1.5%. So we shall see how the day expands. All right, what else? Supermicro, SMCI. That's going to be one to watch, I think, for El Trados. Bouncing off the 840 level. Watch that. Any opinions on PayPal stock? Yeah, you know, I've sort of been wondering when PayPal stock is actually going to make a move. It's tough. It's just the entire financial services space has really been well, fintech space specifically. It's really been hit. I don't know when you're actually going to see some form of a U-turn in the fintech space, especially with this fear of sort of heading into recession. A lot of folks, I think, are under this impression that, oh, well, you know, fintechs are going to get hit hard because they'll be stuck with loans that go bad or this, that, or whatever. I don't know. Yeah, it's a tough sector to bet on, but, you know, who knows? Maybe is now the time? I don't know. And zoom out on the week chart over here. What do you got? And you're bobbing around the bottom. You know, $50 seems like it was the bottom, and that was below the present fib that I've drawn here. Let's go ahead and adjust that. 50.25. Let's drop it down. 50.25. There you go. Bobbing off that fibby. Wow. What a crazy ride for PayPal stock. Imagine getting hired there, you know, at the top at like end of 21, and your stock comp is just bled out to these low levels. Crazy. Crazy. Do I think Jamie Dimon selling $150 million in stock for the first time in 19 years is a bad omen for bank earnings? Maybe. I mean, you have bank earnings coming up this Friday. It's possible. You know, he's also thinking about getting towards retirement. So, you know, there could be more at play there than just trying to play inside information. But, yeah, I guess we'll see. All right. Yapping about Boeing now. This whole Boeing thing is kind of exhausting. It's this, you know, now they're gonna plead guilty to, you know, certain charges. Blah blah blah. Let's see what the stock's actually done on that. That would be BA. Yeah, it's up 75 bips in the pre-market on this. 186. Oh. Yeah. Strange stock is moving. Yeah. All right, let's listen in.
Can still go through. David, that's a big imminent.
Guilty of murdering whistleblowers. That's a good one. Yeah, no kidding.
Spirit to Boeing.
Right.
It's a lot of not cash outlay because it's stock.
It's no longer shrink to grow.
No, it's not.
It's grow to deal with your supply chain issues or your, I don't know what you want to call it. Yeah.
Well, but
your inability to build an airplane the way you want to.
I remember when they split that up to be able to totally financial engineer a better quarter, better year. Well, better luck next time.
It doesn't sound like you think their defense work is threatened by this would-be felon
we are now within the last 30 seconds leading up to the bell. Tesla down about 1.5% after the incredible rallies. Will it hold onto 247? And will it get back to 250? We will find out. You've got Enphase up a couple percent, and let's see how the rest moves. Let's listen in.
more. True. We'll see what that means for certainly their executive search in the weeks to come.
Yeah, I mean, I think that maybe you want everything out. Get everything out. But there's one thing very clear. They're making
Let's get the opening bell here in the CNBC real-time exchange. And the big board at Smurf at West Rock, celebrating its merger and first day of trading over the NASDAQ. U.S. Olympic men's soccer.
All right, we've got a green candle on Tesla forming. We've got, let's see here, Boeing's trying to move up, Boeing up about 131. You've got, I don't know if that green candle is going to hold over a Tesla. It's up about 140, 130. Yeah, it's trying. Enphase can't hold up. Meta can't hold up at all. ServiceNow drops like 4.5%. Holy smokes. It's a big old drop right there by ServiceNow. Then you've got, let's see here. You've got, what else do you have? You have, PayPal, oops, that's messy there. Oh, there we go. Okay, there we go. Then you've got, what is this? AMD. Oh, AMD's trying to move. Okay, that's really nice. AMD, starting to get your red candle over here as well. And let's see here. You've got Palantir. Wow, Palantir, red candle down. Okay, give me a second here. I gotta send a little post here, and then I'm going to listen into Kramer, and we'll be right back. I'm watching Palantir as well.
Wow. Yeah.
Wait, what? Wait, we're not talking Nike. We're talking Starbucks now.
Okay. All right.
Jim,
so,
wait, are you making a turn on Starbucks? Because you were ready to put them on the Hall of Shame wall.
Listen to me. Starbucks, I think Starbucks goes to 90 before Nike.
Starbucks to 90.
Before Nike.
Before Nike.
90, big. So, big.
What,
David, big. I'm not talking about here. I'm talking about big.
What is emboldening you to make this kind of a call, Jim?
I think that a lot of the political turmoil that upset Starbucks may be behind them somewhat. But, David, that stock has cratered because of that everything had been going wrong. I'm betting that something's going to go right. Whereas Nike, everything's going wrong, and I can't find anything to go right. Even Jordan's.
Well, Best Buy was a little around this price when you said it would go to 90, and it did.
Best Buy, they got a product cycle.
You're going to try it again?
I'm going to get the new PC. The new PC is a godsend versus this one where the battery burns out after 3 hours.
Nike and Starbucks both have one other thing in common, which is China is very important to them, and then you Apple and Tesla. When I think about sort of the four names, Apple, Tesla, Nike, Starbucks,
right,
in terms of how important China is to all of their businesses.
And don't forget Win from Macau.
Yes,
but I would say that the problem with Nike, if anyone goes over that conference call, that was a call of despair. It was a call of a company that is not going to be in the playoffs for some time. It was almost as if it wasn't, they were so downbeat about themselves that someone should have gone up to them and said, get your head out of your on-ons. I don't know.
You mean pick yourself up, dust yourself off?
This is one where, you need Dallas Goedert going to Jalen Hurts and saying, well, you get.
So what changed things for John Donahoe and company?
Okay, so that's a great question because everything was bad. Direct-to-consumer was bad. The relax fit was bad, lifestyle. I think that they have to get a product guy in there that's a real strong product guy. See, Donahoe's he's a tech guy, kind of a tech guy, like KJ, like Kevin Johnson when he came in at Starbucks. These two companies are so alike.
Kevin Johnson.
Series. We could do a series on Apple Plus, David, about these two. But I will tell you that right now, I don't have any reason for Nike to go up, and maybe that's...
Well,
that's bullish when Jim Cramer goes bearish. That's what I always like to say. It's a terrible joke, but it is. It's something that a lot of people, I guess, joke about. But anyway, okay. So let's focus here for a moment. So we've got a lot going on. Tesla's down about 2%. AMD's got a giant red candlestick coming through right now. You've got Enphase not holding up. Meta's not holding up. ServiceNow is not holding up. There's a lot of red out here. Supermicro, it does bounce off that 840. There it is. Supermicro, Palantir are running right now. I think Palantir's running more than Supermicro, but honestly, that NVIDIA move, that's pretty nice. And so's Intel. We were watching Intel quite a bit this morning. There's some real trades to be made here. Some of these that we've been watching. Look at that Intel rejection. You can't even make that line up. It is a perfect rejection. Perfect rejection right there by Intel. Not bad at all. ServiceNow down 4.8%. Holy smoky dokies. That is a lot. So something to watch there. Why though? I wonder. Did they get downgraded or something? Or what happened here? I don't know exactly what's going on there, but we'll watch for that one. Okay, so then we've got let's see what else here. Yeah, Supermicro, solid run at the moment, and then Tesla kind of continuing to drop a bit. While it looks like, oh, Palantir gets a red candle there. That's going to lead some people to get stopped out of this one, that trade. But I think there's still a potential there. Let me see, is that happening to AMD as well? Yep, happening to AMD as well. Is this the broader market? Looks like everything's red candling at the moment. Sometimes those are the best. Oh, yeah, look at the Qs. Holy smokes. Sometimes those are the best opportunities to buy the dip. Let me see if there was any particular news that came across here. I don't think there is, other than this talk about Biden wanting to stay firmly committed to the race and suggesting it's time to end talk of swapping. Let's see here. So yeah, ServiceNow drops another %. Holy smokes. I wonder how Celsius is doing, because Celsius was having a rough morning as well. So if I go to Cell H, not as bad. They actually recovered a little bit. Little bit of recovery there. It looks like trying to come through on the Qs. And Supermicro trying to hold on. Yeah, Palantir's trying to green candle here. And AMD as well, trying to stay above the VWAP. You've got Nvidia trying to, so some kind of little weird sell-off happened there for a moment. You had that in BTC as well. The entire market across the board had a little bit of a heart attack there, just for a couple minutes. But again, sometimes those could be really great entry points when other people are getting stopped out. You're looking at those as entries. So Meta, maybe too early to say if that one's trying to rotate back up. Let's see here. Oh, there's Snowflake. And yeah, AMD, Palantir, all of them. It seems like everything's trying to candle back up over here. So, okay. Let's listen in briefly. What do we got right here?
Shouted something at him and he immediately had a joke. Constellation Energy. Hey, nuclear power, David, it's back.
Yeah, I just went there for you.
Breaking news.
Largest owner of nuclear power plants in the country, and they will. And yes, the stock is up a lot.
It was a Dangerfield kind of.
Jim, we mentioned Boeing. Really quick, TSA, we set a new record Sunday, more than 3 million passengers. We didn't mention Southwest naming a board member in this face-off with Elliott.
Well, I got to tell you, I think that Elliott is very abject. They would like everybody to go. Okay, they want everybody to go, and it's kind of ugly. No, it's real ugly. That's just a refutation of everything that these guys are doing. I was hoping David would mention, apropos of the TSA, Disney, which has suddenly got a positive comment. I'm going to save Disney.
Why?
Because someone in my ear said save Disney.
I can barely hear anything in my ear anymore.
JP Morgan raises some numbers on Disney after some of these successes at the box office, which we'll talk about in a minute. We do want to get to D.C. this morning. Emily Wilkins with some breaking news on the president. Morning, Emily.
Hey, Carl. Well, yeah, President Biden is out today with a new letter to congressional Democrats. Yep. In it, he makes the case that he is going to stay in the race. He's going to continue running. He says, look, I wouldn't be running again if I did not absolutely believe that I was the best person to beat Trump in 2024. That's part of the letter. He also says that voters made their decision during the primary who they wanted to vote for and that they have picked him. Of course, this comes as lawmakers return to D.C. this week. It's the first time that they're actually going to be in town having face-to-face meetings since that debate at the end of June. And really, we're expecting to see a number of lawmakers speak up a little bit more and say, hey, we do have these concerns about President Biden and we're looking to make them public. So clearly, this letter is Biden trying to get ahead of all that and make his case directly to congressional Democrats this morning.
It'll be a busy week with the NATO summit in town, of course. Emily, appreciate that. Emily Wilkins. Jim, overall, the markets, we haven't talked a lot about Powell's appearance tomorrow, Senate banking, but it's certainly as we get closer to election season, the future of the Fed chairman, at least, is going to come into view?
I think people have to understand that Jay Powell is providing over, I think, one of the great fast tightening cycles and then perhaps soft landing. David has been very reassuring. I mean, what are you going to say? He's been bad for the market? I mean, the guy's been just unbelievable. And it's not necessarily the president who used to tell me on many occasions that he didn't care at all about the stock market.
Right.
Not at all. Versus the previous president, President Trump, he would call me and say that his Dow numbers were good. Dow.
Yeah.
Celsius, by the way, rising right now. So you got a nice little push on Celsius trying to recover from some of that red it had. AMD is trying to get to 180, and Palantir is really trying to push up as well. Something to be really watchful of with AMD is AMD just broke with a full candlestick, even on the unaveraged over here, fully broke its 164.46 level. That's a pretty big deal for AMD, so I think AMD's got some real enthusiasm set up for it. And so I'm watching AMD. I'm also watching Palantir. Palantir, not from a valuation point of view, but rather a sort of momentum point of view. Same thing with AMD. So watching both of those. Okay, so then let's see here. What else have we got? Well, let's see here. Looking at the momentum this morning, looks like most active this morning, Bitcoin, Maxion Solar, Tesla, Nvidia, DJT. DJT's up about 1%. Socially trending, Paramount, Intel, Palantir, Meta, ServiceNow. Those are some of the social trends. All right, let's jump in. Let me see here. I want to look at Palantir, and there we go. Let's get down to the minutes on these. Yeah, here we go. Okay, so Palantir and AMD. How's Tesla doing right now? Tesla, let's find out. Let's jump into Tesla. Tesla down about 2%. Yeah, it's somewhat holding on to that 2% to the downside there. I'm also watching. So I lately have, and I used to do this just on the iPad, but they also have TradingView for the computer. So I've been watching TradingView on the computer, as well as Webull sticks over here. Tesla now selling down a little bit more. Really watching AMD here hold on while the broader market seems to be a little fussier. Q's here. Oh, look at Supermicro, by the way. Supermicro just keeps going. AMD is not moving as well. Enphase, nice 2% move here on Enphase. Nvidia wants to keep moving, which is pretty exciting. Palantir got a little red candle there, not great. And then you've got, yeah, the Q's moving up solidly from that floor there, although very slowly. Robinhood, ooh, Robinhood just sort of gave you a little bit of a tank over there. Although it's trying to bounce back up into the 256 level. Okay, let's see what the Doomers have for us. Let's see here. All right, Doomers, what have you for us today? Please give me answers.
That had through the fact that U.S. growth has been generally resilient. All of those pressures add up to opportunities for us, and particularly differential pressures across countries. After the tightening cycle was very global, the impact of that tightening cycle across the world has been quite different, creating a tremendous amount of opportunities for a strategy like Pure Alpha.
What do you expect going forward? I was watching last night in preparation a panel you did at Davos, which, you know, was back in January. You were skeptical that we'd get 6 cuts this year, and at that time, the market was pricing that in. Now, you know, we're only looking at 2, maybe 1, and yet the market is up, you know, 15%. What's driving that, and can it continue going forward?
Yeah, well, when you talk about the equity market, I think the biggest question, right, the thing that reconciles the circle between the interest rate market and the equity market is productivity. Is there going to be a major productivity effect of the new technologies, machine learning, et cetera, coming through? Because you need it, really, to reconcile the level of the stock market. The expectation for earnings going forward are quite high. At the same time, the expectation in the interest rate market is that the central bank will be able to cut rates, that services inflation will continue to come down. So you need this kind of perfect situation of earnings staying strong, demand staying strong enough to make those earnings strong without keeping inflation above the Fed's target. How do you get there? You've got to get there through higher productivity. So that's the big question, is how much productivity, when will it occur? Because to reconcile the markets, you need a pretty big jump in productivity to allow higher earnings and lower inflation.
Well, I definitely want to get to machine learning, but before we do that, let's wrap in Fed risk and political risk into one question, because I was reading a note from Goldman saying that the risk of Trump being reelected and putting in place some of those tariffs that he's talked about, it could lead to 5 extra Fed hikes. So not talking about cuts there. And when you think about all the known unknowns that are out there, especially as it relates to politics right now, are you hedging for any risk of something like that scenario playing out?
Yeah, I think you have to be really thoughtful because there's so much political risk going on. And the shift generally you're seeing across the world is kind of dissatisfaction with the people in power, populism in many cases continuing to be on the rise. And a Trump versus Biden or Trump versus whoever the Democratic nominee ends up being is very significant change in policy. One of the more significant elections. It'll probably happen very quickly, just like there was the significant corporate tax cut when Trump came in before. He's coming in ready with tariffs. That's the big first thing. You know, the second thing will be the continuation of the tax cuts. All of this move towards populism is pointing towards a continuation of more government deficits, probably more inflation, tariffs, at least in the short run and probably in the long run. Our view would be that they're inflationary. And a Trump presidency, the thing that we'd kind of most be concerned about is the long end of the rate curve, probably bond yields. Fed, they'll try to get an easy Fed in and probably have the most significant challenges on the long end of the yield curve in terms of bonds. But those policy changes are going to be significant. And if you look at basically just understanding global macroeconomics today versus 25 years ago, understanding government interaction with markets has become so critical.
Right. How do you then position, if you believe inflation is in the future, do you go short the long end of the curve, and do you do it significantly?
Well, we try to take a diversified set of positions so that no one position can be too dominant in our portfolio. But it's tricky, right? The long end of the yield curve, a lot's going to depend on politics, right? And a lot's going to depend on how unified the government is. Will Trump be able to get everything he wants, or if the Democrats are elected, will they be able to get everything they want? Divided government will generally be good for bonds, and a unified government, one way or the other, Republican or Democrat, would probably be bad. Anytime these governments are unified.
Interesting, kind of just the broader market, a little bit tough here. Super Micro just started rolling over. Not only did Super Micro start rolling over, Enphase stopped rising, AMD stuck, Palantir kind of rolled over. It's down about negative 80 basis points right now. The Qs are turning negative. Tesla's down 2.5%. You're getting sort of a broader sell-off here. We're trying to see if there's going to be some indication of a bottom forming. But right now, it seems like the only thing that's happening is NVIDIA's going up. NVIDIA's now up 3%. Tesla down 2.5%. The Qs are trying to stay positive. Enphase is trying to continue to go green here. Nike's down 1%. Palantir's down about 1% right now. So that one's really getting hit. Despite the momentum and enthusiasm. I mean, it was up 3% in pre-market. It opened up about 1.5%. And none of the pre-market momentum carried over. And it completely reversed here at the moment, at least. So a lot of folks getting stopped out on this one and getting paper handed out. And the question is, where's the reversal? But right now it feels like the market is still trying to find its footing. Again, with the exception of NVIDIA. NVIDIA is the only one that's just taking off right now. Even BTC is rotating down. And you've got Apple that rotated down 1%, though it sort of stopped falling. And looks like Palantir's trying to find a floor right about here. No guarantees. Maybe let it do its thing there. Tesla keeps going, now down about 2.6. Yikes. And then you've got Super Micro trying to get back into the race over there. As really likely as NVIDIA just sort of kind of keeps moving. Look at that run on NVIDIA, pretty impressive. So watching those pretty closely. Okay, let's briefly listen in over here again.
Its own AI strategy in a new format here, in a new fund format. But also, you were an early investor in OpenAI, in Anthropic. How do you think about investing in AI at Bridgewater? Do you buy into those high-flying names, or are you better off doing it in the private names personally, given where valuations are today?
Yeah, well, I'd say when we think about it from a pure alpha perspective, most of what we've built up at Bridgewater is an expert system based on everything we've learned over the 40 years, mainly on how economic cycles work. And big productivity miracles are pretty separate from economic cycles. So when you look at what we're doing in Pure Alpha, we're generally trying to make sure we don't have too much exposure to whether the productivity miracle works out or not. So when we trade U.S. equities, we trade them kind of with AI hedged, because the pressures, the normal cyclical pressures will play out on the regular companies. And when you look at U.S. stocks, it's kind of the regular companies that we'd say are pretty expensive relative to the rest of the world. Mediocre companies in the U.S. have a U.S.
Qs are now up 15 basis points. This is interesting. Very interesting start to the day.
Hitting the cutting edge, that's a different story. And it's very different than 1999, 2000. I've been at Bridgewater for 29 years and having lived through 99, 2000. That bubble was all about future expectations. Most of what's priced into equities today actually would say are based on what's happening right now. I mean, what's happening with NVIDIA's demand is incredible. And whether it's slightly overpriced or slightly underpriced or whatever, it's a close call. This is not like the 99 bubble, at least in my view, because the earnings for those companies are actually there in a way they weren't there for a company like Cisco in 1999. So there is a big difference. Now, you still need those earnings to be sustainable, which requires a continued growth in those areas, but not an outlandish one. And that really comes to what internally. So we need to understand AI from a macro perspective, and then we need to understand it from as a user, a micro perspective, right? That, you know,
NVIDIA keeps going. It's now almost at 4%. It's wild. And you think like, oh my gosh, is it too late to buy NVIDIA? And then you look and then it's up even more. So I don't know how long that one's gonna go, but it's definitely trying. Look at that, 130. Let's see what kind of order book you get at 130. Sometimes you get a little bit of market clearing that has to happen at some of these levels. So yeah, you're getting there's your red candle on NVIDIA. Question is, if NVIDIA rolls over here, is the rest of the market going to roll over? Getting a little bit of red there. Not the greatest start to a day. I'll say it's you know, you started like there was some really good pre-market momentum. Didn't really carry over very well into the actual market. You look at that, you got Intel, wow, Intel broke out over that 33.3 level, now rotating back down to its support level here. Palantir's trying to go green again, so it looks like Palantir found its bottom. Obviously no guarantees, but it looks like Palantir found its bottom. And it is trying to come back here. So Palantir was one of the biggest momentum movers in pre-market and one of the top trenders. AMD now giving up quite a bit here. AMD, let's see if this is just sort of stop-loss fishing. Sometimes what you wonder, a lot of people wonder this, they ask like, you know, is it just sort of like hedge funds or whatever out there that are stop-loss hunting, and they get you to paper hand, and then as soon as you paper hand, the darn thing just starts running again. And that happens a lot. I mean, unless there's something broadly in the economy that's pushing the market down. That's why it's often easier to go calls than it is puts. The economy broadly here, probably a little nervous about CPI, PPI. This, let's see here. CPI, PPI are going to be something that everyone's paying attention to. this week. But also remember, you have Fed JPOW testimony, and that's going to be something that a lot of folks are paying attention to as well. So we'll see what happens with Fed Chair JPOW. That'll be tomorrow. Tesla now trying to recover. Look at that. Getting a nice green candlestick over there on Tesla. Green candle on AMD. Looks like Palantir's trying to hit its bottom. Trying to come on back into life over here. Yeah, there goes Tesla. Nice fat green candle. You've got NVIDIA had a little bit of a pause there. Now rotating up. You've got Enphase sitting at about 2% as well. Nice. Okay, so let's see here. What else do we have? Okie dokie. Then, ooh, nice little candle there on Enphase, huh? Okay. All right. Let's see what else there is. It's almost 7 o'clock in the morning, and we're 4 minutes away from 7.
This is going to be the quarter where we're going to hear people say, you know what, we don't know about our volumes, but they're not up to snuff. And I think it's going to be the impact. It's finally happening. You're going to get it from the basket that you're going to hear from some of the grocery stores. So it's going to be difficult. And no one wants to admit it. Just like what on the Brown-Forman. No, it's not cannabis. No, it's not GOP. Well, what is it? We suddenly don't like Jack Daniels. This country, Jack Daniels is a staple.
Yeah, we'll get ConAgra on the same day.
And that's going to be very tough, ConAgra. Very tough. They've raised prices, too.
Right. Jim, how about tonight?
Okay, I'm going to determine whether Nike's going to go up or down. And it's nothing to do with my bet with David at Starbucks. I'm just going to tell it as it is.
You got Nike
remember
on the
you
brain.
Like John Dono? Remember you had
I got to know John when he was
eBay.
When he was at eBay, and
excellent relationship.
Yeah.
Well, let's see if it survives tonight's piece.
Oh boy. Oh
no,
boy.
No.
That does not sound good.
John's good. It's just that there are a lot of things that aren't at the company.
All right, tune in, man. When Jim takes apart Nike tonight.
No, I'm not taking it apart.
Oh, you're taking it apart.
No, I'm not. Down to 75. You don't take it apart at 75. Take it apart at 150. Not 170. I got 120. I got 120. You'll get 100. In the back, I got 95. That's what's going on there.
The auctioneer.
You betcha.
We'll see you at 6, Jim. Mad Money, 6 p.m. Eastern Time. Dow's up 200 as the Bulls try to hang on to some all-time highs this morning. Stay with us.
Yeah, that seems like exactly what's going on here. You're getting recovery in AMD. Basically a bounce off the 200-day moving average, or 200-minute moving average, SMA in this case. Oh, there come the red candles again. How bizarre, huh? Look at this. Here goes NVIDIA trying to go for its second stab at breaking its 4% level. Tesla's trying to run as well, though also hitting a little bit of a red candle. Pit stop right there. Oh, we'll call them the little pit stops. You've got the Qs. Really, the trend is a slow up today, it seems like, on the Qs. Very slow up. Super Micro's having a little bit of a better day on trying to trend up. And ServiceNow kind of getting stuck in the mud there. Robinhood below any kind of semblance of support. 57.1 on BTCs. SPY trying to find a direction. Apple down 1.2. Wow. Yeah, red candle there, NVIDIA. And Tesla's trying to push up. Alrighty. So, what else? Let's see. Tesla, 250 is a big level for Tesla, mind you. Big level. So, I'd be paying attention to that. I think once you break 258, by the way, you really start hitting some desirable levels for the stock. So, let's see here. That is... that's mostly when I think some of the euphoria comes back. Not that that's not necessarily happening right now. But let's see what happens at that 250 test. Looks like we're about to knock on the door of that 250. There it goes. Here it comes. Here it comes. At the same time, Qs are going green candlesticks. Palantir, AMD trying to come up. NVIDIA is trying to push. Supermicro gives up its 7% again. Here it is. Is it going to push through? Is it going to go? Or is it going to get rejected? Let us go. Let us find out. I don't know. Anyway, we'll watch this for a moment. Will it blend? Will it hold? I don't know, good sire. I have no idea. But yeah, 250 is going to be an order book level to watch, so keep an eye on that one. That's definitely going to be something I'll be paying attention to. So as far as yeah, there it goes, getting a little bit of a reject in there. As far as timing, it's now 7 o'clock. Let's see what the Doomers have.
He tells us why in just a few minutes.
And a view from the C-suite. We'll speak with the CEO of Smurfit Westrock, one of the world's largest packaging companies, plus the CEO of Lamborghini. Before we get there, let's get a check on these markets right now. You can see the S&P 500 currently at record highs, up about 0.2%, actually outpacing the NASDAQ 100. Big tech, I'm going to go ahead and call that unchanged on the day. It's the same thing, too, if you take a look at the bond market, taking a little bit of a breather right now. The 10-year Treasury yield currently unchanged, Matt.
Yeah, great to launch this show on this day, because if you had said previously you're going to launch on July 8th, I would have thought not much going on.
Tough sell.
Amazing the amount of risk events that we're launching around.
In addition to Jay Powell this week speaking to Congress for hours, you also have CPI after we saw a weakening of the labor market here. So a lot on the line.
Plus the elections, right?
Plus Jerome Powell.
Yeah, so much going on. In fact, let's focus in on election risk right now. Turn to Europe, where we've seen real political upheaval in the last couple of days. In the UK, Labour wins a landslide victory, ending 14 years of Conservative government. A surprise victory for the left in France, leaving Le Pen in third place when we thought she'd be leading. Meanwhile, here in the U.S., President Biden just came out with a 2-page letter addressed to Democratic lawmakers saying he will remain in the 2024 presidential race amid calls for him to stand down. Joining us to help make...
There goes Tesla. Tesla now trying to push through the 250 level.
John, great to have you on the program on our launch day. Thanks for joining us. Let me get first your take on the UK. I mean, it's hard to overstate what an incredible shift this is, and yet Keir Starmer isn't the left-leaning Labour leader that we've seen in the past.
Well, firstly, what an honour to be on the first thing of open interest. I mean, obviously...
No thanks. Boring.
Market that the Fed can cut rates twice this year, September and December. And you know, we spoke last week in Sintra on the panel, and he made it very clear that that's still a possibility, even though they still don't have the confidence just yet to cut. Here's what he said, just as a reminder.
We've made quite a bit of progress in bringing inflation back down toward target. While the labor market has remained strong and growth has continued, we want that process to continue. I think the last reading and the one before it to in inflation, the one before it to a lesser extent, do suggest that we are getting back on a disinflationary path. We want to be more confident that inflation is moving sustainably down toward 2% before we start the process of reducing how tight our policy is, of loosening policy.
So he said two things there, and I thought, David, that he was more confident than he has been in the progress they've seen on inflation. Said the disinflationary progress is back on track, but he still wants to see, it sounds like, I don't know, at least another reading that inflation remains in line. And he also really played up the dual risks, the risk on the other side of the mandate of weakening inflation, weakening jobs. And if they start to see a turn there, that'll push them closer to cut. So I'm not sure investors should expect any different message this week, because we haven't really had any, besides the jobs report,
right.
We haven't had another major
jobs
inflation
report
rate.
was generally positive in terms of at least pointing to a potential September cut. I mean, it was 206,000 top line, but there were some revisions, 4.1% unemployment rate, some weakness at least, people pointing to as saying indicative of a soft landing.
Right, because we're seeing a trend of softer our average earnings.
Right.
We're seeing a trend of higher unemployment. I made the unemployment chart as the chart today. We're now at 4.1%, which is still benign, not terrible. However, we've come up off the lows of 3.4%, and there's this rule a lot of economists follow, the SOM rule from
Not the SOM rule again. Again, this whole thing with the SOM rule, like, if you just stay at 4.1 for a bit, you're going to lap some of the numbers that made this SOM rule look high. and you're going to escape that number pretty quickly.
The SOM rule, which would be indicative of recession. It's predicted every recession since 1970. So we're coming off lows. I would say job market moderating, slightly cooling, nothing extreme. But to your point, David, the odds of the September cut off that jobs report went from low 70s percentage to 78%. So the market did see through the strength in the headline number and looked at some of the weaker elements of that report. Again, nothing dramatic in terms of stress.
This week, though.
Okay, NVIDIA just gave up a little bit. The Qs are positive. While NVIDIA is giving up, I will say, Enphase is running on the Solar Edge upgrade. And that's a pretty good one to watch right now because it's so low. It is at a floor. Hit a floor at $95. I'm going calls on this sucker for next Friday, just to see if you can get a rally this week in some of the solar sector here. Tesla had calls at the start of the day, still have calls. I would be cautious about this Friday just because I think you'll have some volatility, but next Friday I think looks pretty good on Tesla. Mostly because, folks, once you break this 258, I think this is going to be like glorious, like pretty dang ridiculous, pretty dang quickly. So I'm going to watch this one very, very closely. AMD, this breakout right here, I think is just getting started on AMD, so I'd watch this one carefully. This is the averaged right here, or so the non-average candlestick. This breakout over 165, big deal, just getting started. The momentum on Palantir, I don't know what's going on, but the momentum is insane on Palantir. I think a lot of people paper-handed at these red candles over here, and let's just say I had options on Palantir. I double bubbled right over here, and I'm pretty happy I did because now I'm pretty dang green. In fact, I'm sitting green on almost all my options from that I bought this morning. So remember, if you want any of those trade alerts for what I'm doing and sort of where my stop loss, like if I'm getting stopped out or if I'm not getting stopped out, sort of what's going on. I can't guarantee that we'll make money, but you get all my alerts over in the Stocks and Site group. That's over at meetkevin.com. We've got the next price increase scheduled for Friday. And that's because mostly we have this week of CPI and PPI. It's a pretty big week, a lot of coverage happening this week. So check those out. If you have any questions, always feel free to email us at staff@meetkevin.com. Remember, you get lifetime access to those course member live streams as well. This is great. Like, this is, okay, yeah, let's go, Tesla. Let's go. Oh, let's go, Enphase. Come on, baby. Let's go. Yeah, and I don't even think some of these are short-term trades. Like, personally, I think CPI is going to come in soft this week, and you're going to see a lot of these just continue to move. Like, you got to be careful with stop losses, too. I'll tell you, most people set stop losses way too tight. I've been a victim of that myself. I've set stop losses way too tight in my life, and it's cost me a lot of money. You go in, you pay the ticket price, the entry, you get stopped out, and you're like, what the hell did I just pay for? And then you end up being right on the trend, but you're out of the play. So you got to be careful with stop losses. They're almost like a way to guarantee losses sometimes. Nice moves, though, here. Palantir, great moves. AMD, great moves. Tesla, giving back a little bit on the 1 minute candle here. Not so worried about that. And even NVIDIA's coming back. Folks, this market is going into rally mode. If you missed the dip opportunity here to buy, it may not be too late. I mostly say that because I think this market is incredibly hard to short. I've also lost money trying to short right now. Well, not today, because I realized, like, this is not a market that's trying to be shortable. This is a market that, quite frankly, is euphoric. And I'm not saying it's going to last. Don't get me wrong. I'd be counting my blessings, wherever your green is. It's not necessarily a market that's going to last forever, but this can keep going for a few weeks. Keep going for a few months, frankly. And so it's a pretty exciting market. So Supermicro's topped out. I definitely think that's the case. So Supermicro's topped out. So I didn't want to chase Supermicro. Trust me, this was like a girl with her top off, and it was so tempting, but I just had to say no. Married elsewhere, okay? So that didn't work, and I'm glad I stayed away from this one. Same thing with NVIDIA. These could get really seductive. So I stayed over here at the painful ones, which were the Palantirs, the AMD, the Tesla, and the Enphase. And I think there's money. I think the trend is up on the day. I don't think it's paper handing early is going to be rewarded on this one. And really, we don't have catalysts today that say things are going to go bad. I mean, you don't have Fed speak until tomorrow. You've got, you've got inflation expectations from the New York Fed coming out at 8 a.m. California time. That's 50 minutes away. Nobody really pays attention to that or cares about that one. They care about the University of Michigan Sentiment Index. So really, in my opinion, you're looking for a trend today. The trends are pretty clear. I'd say probably the strongest trends. I mean, obviously, NVIDIA's had a strong trend, but it's consolidating. I think the strongest trend that you have right now is Enphase, followed by Palantir, Tesla, and AMD. Now, AMD on the day is consolidating a little bit, so I don't love this pattern on the day. So I'd be tempted, like, you know, I'm personally in on this Friday on this one, but I'd probably want to go for next Friday if I were going to reopen the position. But I think this breakout over 164, especially on the back of an NVIDIA rally and Supermicro rally like this, is really good for Supermicro. So we'll see. And then the energy sector has just been killed. So I think there's a lot of momentum here as well. But again, you're going to have ups and downs on the day. You could just look at the cues and see what's going on with the ups and downs. So let's take a look at BTCs. BTCs giving us a little bit of red candling here. Not unusual. You're going to get this volatility throughout the day. And really, I think there are opportunities to not get stopped out. I think they're actually just opportunities to potentially add to a position. That's what I've been doing. I'm staying away from stop losses, mostly because I think these broader trends are in place, and I don't want to miss them. So I'm watching. I've got a four chart up on this other monitor that I'm looking at right now. One day I'll actually hook this up to my switcher board. Actually, that day might come within the next couple days. I ordered the parts that I need for it. But anyway, I've got AMD, Enphase, Tesla, and I want to swap out BTC. I'm going to put Palantir there instead of BTC. Bitcoin has unfortunately been a little problematic as a leading indicator. It was really good over the last few months, and it's really just started weakening as a leading indicator, probably because of what's going on with Germany or Mt. Gox or whatever you want to say. It's been a little bit of a fussy-dussy, a lussy-bussy loser. So, you know, obviously its trend has not been in a fantastic position. It's been in a rough spot. So, you know, maybe understandably so why it hasn't been such a great indicator. But you zoom out on the week chart, you've got, you know, you've got a little bit of a mess here. Some folks say inverse head and shoulders. Some people go into the day chart and say, no, forget about it. It's just a broader term down channel. You can see that channel right here that we have. If I extend that a little bit, let's extend that a bit. Yeah, we got a little bit of room to go there. Let's extend this one as well. There we go. Nah, not too useful over here yet, but we'll see if it ends up becoming useful. So, anyway, nice little sell down there on NVIDIA. Not great. So, a little bit of NVIDIA pain. Getting some rotation down here. And looks like the Qs are stabilizing a bit as well in the face of that. Okay, let's go on over to, let's see here, Bloomberg.
Private credit industry. Of course, a month or two ago, we saw Pluralsight, backed by Vista, basically transfer its assets into a different subsidiary to obtain more financing from its sponsor. That's become a little bit of a battle cry. You see lenders basically asking for Pluralsight protection right now. I won't ask you specifically about what happened with that episode, but how do you see this evolving in the industry? Do you think that we're going to see more creditor on creditor violence, as some have been calling it?
The creditor on creditor violence.
People tend to do what they can to enhance their position financially. Most people will stick to what they can do legally. Some people will stick to what they can do ethically. I don't there's some question about what that means. But people, if there's an opening, people will take it for the most part. And there is an opening for what you call creditor on creditor violence. That is proactive efforts to enhance your situation financially at the expense of somebody else. And so the important point is that it's up to lenders to study the documentation well enough to prevent it. That's it.
Are you active in office space right now? Because it seems like the perfect storm for anybody who has the financing. We talked to Igal Namdar, a real estate investor, a couple of days ago, who is getting like 70% off really big, important office buildings in New York, the capital of the world. Like, how can that not come back?
Well, the question, Matt, is very simple. Let's say you're getting 70 off. Is that enough? And the mere fact that the price of something is down doesn't make it a buy. It has to be that the price is down more than it should be, given the fundamentals. And, I think it's going to be up to the experts, people who've made their life in that world and with success, to make that assessment. I think that if there is a bunch of real estate funds formed this year, somebody who puts all their money into office and somebody who puts none of their money into office, one of them will be the best performer.
Well, duh.
Under the surface, we are just about 5 days away, really, from bank earnings, and the question is we enter this era where they're about to meet new capital rules as well. Mm-hmm. Are there still just tremendous stresses under the system that people are not noticing?
Well, it's the small to mid-sized banks, the community and regional banks that are heavily weighted toward real estate loans. The biggest banks, over $250 billion in assets, don't have much of a concentration. They're not at risk. But some of the smaller banks, I think on average the banks under $250 billion in assets, loans on real estate make up 160% of their regulatory capital. So some of them will find pain, especially the ones who lent above average and concentrated in regions that are troubled and so forth. So, I don't think it's a systemic risk that's going to put us in the sink, but I do think that you'll see some companies in trouble, and one by one, the authorities may have to bail them out, and may well do so.
All right, Howard, unfortunately, we have to leave it there. Great to have you, of course, on our launch day. Our big thanks, of course, to Howard Marks. He is the co-founder and co-chairman of Oak Tree Capital.
Yeah, he's got a good book, too. Okay, a little bit of a rotation down on Tesla, though you're still up above your 250 level. This is a pretty critical level. When I see candles like this, I think people are getting stopped out on shorter term plays. I think you probably get a bounce here at 250, and same will probably be true of the broader market. Broader market, it's slow trend up today, very slow trend up today. Sitting at about 10 basis points. And then you've got NVIDIA that just had a bit of a sell down as well. That's sort of dragging everything down with it. I expect that'll probably U-turn and things will move right back up to green here as we go towards the end of the day. Obviously the day having just begun. Supermicro still giving up a bit though. Google's trying to recover. That's a really good sign for the Qs, broader market. Let's take a look at Amazon, over $200, somewhat moving sideways right now. Apple trying to move up as well at the moment, and Tesla really trying to find its footing here. Anticipate this will slowly start climbing again here as you get a little bit of the short-term trades shaken out. I think the same will be true of all of the plays here: Palantir, AMD, Tesla, Enphase, NVIDIA, and we'll see what happens. So let's see here. What else? We have somebody was asking about the consensus for CPI, PPI. We'll go through these in detail in a video. I'll make a video on the channel, but they're expected to be relatively low. Like core CPI, a lot of folks are like, oh, it's going to be, they're arguing over, oh, it's going to be 0.2. Others are like, no, it's going to be, 0.27. We'll see. And looking to see if anything particularly stands out here. This is an interesting article. Airbnb bans don't make housing more affordable. Well, yeah, I mean, anytime you take away people's ability to make profit on real estate, you end up having less supply of real estate. So, okay. Biden's the biggest news this morning with his letter to Dems. Other than that, things seem relatively chill. Although NVIDIA does not want to hold up today, and neither does Supermicro. Both, oh yeah, look at that. Look at those red candles there on NVIDIA. A little bit of a rotation down. And let's see here. Wonder when that becomes the buy the dip opportunity. Just gonna see if I can find Biden's letter here. I mean, we've already covered a good chunk of it, but I wonder how his predicted odds are moving. Oh, there you go. There's your bounce. Yeah, I just saw Tesla bounce like a whole... See, look at that. Here's your bounce. Here you go. Yeah. So, look, here. You're getting your bounce on Palantir. AMD a little less so. You're getting your bounce on Tesla. You're getting your bounce on Enphase. Looks like we're on the 100 SMA on NVIDIA looking for a bounce. And we'll see what happens there with the Qs. But as far as... yeah, it looks like... odds of Democratic nomination now moving up for Joe Biden following this sort of defiant letter from Joe. So we'll see as Congress comes back this week. A lot of folks think there'll be a lot of pressure on him to move out the way. What's the song? Move, B. Get out the way. Anyway. All right, so... see how the day evolves. If you want to see what I'm trading or how I'm trading it, check it out. Go to meetkevin.com. Check out the Stocks and Site group for trade alerts. Also, check out the other courses on building your wealth. 0 to Millionaire, real estate investing, property management, rental renovations, YouTube, you name it. And a big thing that's also been pretty popular lately is the exclusive mastermind over at meetkevin.com/mastermind. It's a higher ticket, but it's going to be in person, and a lot of folks are really looking forward to that as we get started with that pretty soon here. So first masterminds will be beginning pretty soon. Working on that schedule now, which is pretty exciting. Okay, so I don't know. Anything else? Let's take a look at what questions there might be. Crypto Facts Report. Thanks for the $10. Appreciate it. Biden won't step down regardless of his health. He would need to be forced. It's possible. You know, sometimes you just get this level of stubbornness that's very challenging here for people. Play the nice pee-pee sound. This one?
Nice pee-pee.
Yeah, I love these. And then of course you got the sad ones. But these are the Jim Cramer ones. I prefer the happy ones though. Let's do the happy ones. You always got to, with the happy ones, you always have to start with stars and stripes. Right? And then after you get a little bit of stars and stripes, you got to get a hallelujah in there. Along with some crowd cheer. So let's try those all together, along with horse race. That stuff's hilarious. Okay. Tesla wants to go back down to 250, it looks like. Doesn't want to hold on. And getting a little bit of consolidating there, looks like on the Qs. Yeah, that's a tough pattern right there on the Qs. I wouldn't want to be touching the Qs in that sort of environment. But anyway, Palantir is still moving up. And it looks like AMD is trying to recover. Enphase created a little bit of a floor here at about, looks like about 2.8%. And let's see where the rest of the day brings us. So with that, yeah, boring cues. No kidding. No, I'm doing horse race first. This one.
Bye.
What's another one we got?
V-shaped recovery to the moon. The Nike swoosh house hack. Big PP. Bond market. Data dependent.
All right. I'm gonna push the button. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Nasser is asking, why is nobody replying to emails? Well, it depends. If you send them over the weekend, first of all, you shouldn't anticipate a response, given that, you know, people are off on the weekend. Yeah, I'm looking, we've got, the only emails we have right now are less than 12 hours old. So I don't know if you're going to spam or something, but we've got a bunch of emails here. Bundle coupon email. What's that? Exclusive interview. That's cool. Trade alerts. Bundle. New member question. Yeah, no, I don't see your name. So I don't know. Maybe you're going to spam or something, but you can try again. Yeah, it's funny. Sometimes people on like Monday morning, it'll be like Monday morning at 7:45, and they're like, I emailed 4 times, and then you look and it's like Saturday 9 p.m., Sunday 11 a.m., Sunday 5 p.m., Sunday 9 p.m. You know, it's like, have you ever heard of business hours? I don't know. It's funny. All right, we'll go to the course member live stream soon. See you soon. Thanks.